If you had a $10 bill and somebody offered to give you two $5 bills in exchange, wouldn't you feel just a little richer? Today, we'll be talking about splits, not the backbreaking kind of split, but how to trade Amazon stock split like a pro. Amazon Stock Split Explained is what we present to you in our video today. Let's get right into it. Amazon announced in early March that it would want to split its shares. This move required a shareholder vote to approve the split, which took a while and eventually was approved after a few months. A stock split doesn't necessarily add any value to a stock. Instead, this takes one share of a company's stock and splits it into two shares, reducing its value by half. For instance, breaking a whole piece of chocolate doesn't necessarily mean you have two chocolates, but rather two pieces of the whole chocolate. In June, Amazon completed a 20-for-1 stock split. The talked about Amazon stock split was a big deal because, in the last 20 years, Amazon has not had any split whatsoever. Of course, as shares continued to soar, investors and analysts began to speculate on a potential stock split. The 20-for-1 split means that investors holding one Amazon share received additional 19 shares. Before the split, shares were pegged at $2,000 and brought down to $124 after the split. This was obviously good news for investors who did not have thousands of dollars to invest in just one stock. They can now rely on fractional stocks. This is not the only good thing that would come out of a stock split, and it could also be a positive sign for the company. How? Let's find out in a bit. Amazon stocks certainly had a nice boost after the stock split announcement. Over time, however, we realized that the broader market makes a substantial fall in the following weeks after the completion of the split. The big jump in the stock price corresponded with the release of its quarterly results, which had very reassuring elements for investors. The company may not have accounted for the distraction from how the business performed and the overall market sentiment. The stock has slipped 20%. Higher inflation and costs plague the company, with management indicating that the challenge may last longer than expected earlier in the year. Also, stock splits are often bullish since the valuation gets so high that the stock may be out of reach for smaller investors trying to stay diversified. Investors who own a stock split may not make a lot of money immediately. However, stock prices can get higher in the long term, making it profitable for investors. So when there is going to be a stock split, it might not spell bad news for investors. As an investor, you can practice your swings and successfully predict the market's reaction. Swing trading involves taking trades that last a couple of days up to several months in order to profit from an anticipated price move. Basically, you will need to identify when an asset's price is likely to move. The goal is to capture a chunk of a potential price movement and make the most out of it. One way you can track movements in prices is to know some of the factors that influence stock prices. While we get into more detail on this shortly, we hope you are influenced enough to click on the subscribe button down below. We have more stock news coming up for you. Perhaps the most endearing thing about stock splits, the Amazon stock split particularly, is that existing candidates get the opportunity to purchase more stocks. As already mentioned, the split has opened the door to a broader range of investors. A forward split, for example, gives shareholders the opportunity to own more shares than before, some of which can be sold. Forward stock splits can signal the market that the price of the company's shares is rising and that the stock might be a good buy. The company will also expect to record an increase in demand because more investors can afford to buy the stocks. Let's now discuss the stock price influence. Amazon stock shot up immediately after the announcement because more people are inclined to believe that companies that split their shares are those with high share prices, those that have seen big rises and have been consistently on an upward trend. This is often followed by increased demand for the company's shares, and consequently, the share price being pushed further. Consequently, the influx of buyers influences the stock price. The downside, however, is that if a company splits the stock but keeps reporting terrible earnings, then the stock wouldn't offer much of a lift in the near or the short term. Do you think Amazon's stock split will bounce back soon enough? Let us know in the comments section below. Amazon's cloud computing business continues to record an increase in sales and operating income in double digits. Amazon's revenue and profit growth and its ability to manage challenges related to inflation and cost matter even more than the split. It looks like when all of this eases up, and gains may be in Amazon's future. There is more to explore on Amazon stocks in our video. Amazon stock exploding. Everything you need to know. Amazon stock analysis. Find out more. Until next time, do have a great day.